Shares in Crown Resorts have jumped more than 15% after global investor Blackstone lodged a fresh takeover bid. Joining us live now is business reporter Edward Boyd. Ed, Blackstone are offering $8.5 billion for Crown.
Massive amount of money. This is Blackstone's third offer for Crown Resorts. They've been slowly upping their offer over the last year or so. So the previous offer was in May. It was $12.35 per share. Now it's $12.50 per share. And that will value Crown at $8.5 billion. So the shares today have just skyrocketed. They started trading at $9.90. They're now at about $11.50. So they're up about 16% in a really short amount of time. It's worth noting, though, that Blackstone's offer at $12.50, they have actually been beaten by the Star. The Star have offered more. They've offered around the $14 mark for shares in Crown. But the Crown board are now going to be looking into this offer and scrutinising it pretty closely over the next couple of months. It does mean, though, that major shareholder James Packer, he has about 37% of the Crown stock. Coming out of the Victorian Royal Commission, he was told he needed to sell down that stake in Crown Resorts from 37% down to 5%. So this new offer from Blackstone could be a way for Mr Packer to sell out quickly of his stock in Crown Resorts.
Okay, and Ed, the iron ore price has fallen again overnight. It's now at its lowest level in 18 months.
Bad news for the federal budget and also pretty bad news for Western Australia's projected budget surplus next year. Remember, the federal government has iron ore falling to $55 a tonne by the end of March, and WA has it falling to about $121 a tonne by June next year. Overnight, the iron ore price fell about 5%. It's now at about $87 a tonne. If you look at this chart here, you can see that's the price over the last year and a half. And at the time of the federal budget is the peak in the chart there, where iron ore was $220 a tonne. Since then, it has really fallen dramatically. It's at $87 a tonne now. The big reason for the fall has been China basically crippling its own steel industry. They've told steel mills, you need to stop production because steel uses a lot of coal and creates a lot of pollution. They've also got their Winter Olympics in Beijing coming up in February, and they want to have clean air for that. So the theory is that once the Winter Olympics are finished, some of these steel mills are going to start producing a lot more steel again and use more iron ore. And there's the theory that the price could start to rise early next year, Gab.
Edward Boyd, thanks for the update.